Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to Friday's relaxed morning call. Maybe not as relaxed as some people would like, considering that you woke up this morning, futures are down 11 handles, now we're down 7 or 8, and this basic upper wedge pivot continues to build. Very methodically though, and I will say that each area of this pattern is giving you very tactical areas to maneuver. Now, the overnight news right now is that Japan bounced like 1.3% or so, but not a very impressive bounce considering that it was down another 5%, after its correction off the high. So I think year to date, Japan's up 32%, which is still a hefty gain, but it's down probably 15-16%. So if we lead, or if we're following this type of environment, people think that perhaps we should get more of a correction here. And if you look at Europe, Europe is down, I think, 1% or so across the board off the lows. And, so at this point, it feels like we're in somewhat of profit-taking mode. The question is, what type? And if you look at the chart, the past two pivots have not led to much of a correction. And, if you look at this trend here from November, it's been a very, very powerful trend, okay? Then it accelerated, in April. Okay, so here were the two pivots that, the market went through a corrective phase, one being right here when, you peaked at 1530, we pulled in about 3.5%, wound up bouncing, held higher and continued. Same thing happened here. Breakout failure. That was a spot to take some risk off. We wound up holding the 50-day, and then from there, bounced, basically crossed back above this descending little trend line here, held higher, risk back on, all the way into last Wednesday's outside day. So on last Wednesday, we did have that outside day, a day to take notice, a day to take some risk off, a day to perhaps get short. Then we had some follow through that morning. If you remember, last Thursday, Friday, gap down. The trade was tactically to buy it. Then Monday, gapped up. Pretty much, for an hour was really strong, and then that faded. Okay, so you had to fade that up open or short the counter trend move. Then, what was it? 2 days ago, we opened down, bounced off the lows, and then yesterday, at the end of the day, sold off, and then here we are again. So the question that I think a lot of traders are going to have in their head today, we come back to me, is this down open 7-8 handles, does the range resolve today? Do you press short into 164.5 or so in the spiders, or do you look to buy this down open the same way you could have been rewarded the past 4 or 5 sessions? Now today's a tricky day because you have options expiration on the weekly. There's some talk about the Chinese PMI tonight being a little weaker, and then you also have new flows that come in after a month. So I'm not quite sure if today could be that day you get a gap to the downside and a press. Okay, that day could be happening. If it does, I think over the course of the next maybe 3 to 5 sessions. So with that said, there's still a lot of two-way action, but I know, a lot of people have been emailing me, because yesterday I made that call, I said gun to head. If, I would see 161 in the spiders versus new highs first, saying that maybe we pull back, break below 164, hit 161, but I also don't think the highs of the year are in. And yesterday when we were up about 80 points, everyone's like, oh, red dog, bad call, whatever. All I know is that you look at this pattern here, you take a look one more time, and you will see that it is getting a little choppy. You do have an accelerated range here, and if we were to get a close below the 21-day moving average, I do think there's a high probability we see a move down to this 1600 area or 1598, which is the 50-day, and I do think that would be very, very healthy. And that's something that could take place in the next, week or two. If it were to happen, I think it happens really in the next 3 to 6 sessions. But anyway, not a bad idea to have some risk off. It's been a heck of a run, especially if you're an intermediate trend trader. So as far as tactical, okay, everyone's been talking that, Mr. Musk is going to be interviewed by Kramer, coming on at 10:30. That stock's been a great vehicle. It was down $2 this morning. Now it's flat. Lots of nice trades here on all different levels. This was, the move after earnings. Some guys caught. Here was your little red dog reversal that wound up getting bought. Tactical day-and-a-half trade. Then corrected last week when the market was weak. It showed unbelievable relative strength, a time to be long. 4th day, boom. So now the question is, does it need another inside day or so, or a few of them, before either breaking above 110 to 114 to continue to the path to 150 plus, or does it need to correct a bit? So right here are your levels. You have yesterday's low, which is 101.20. Here's your 99, so that's your support, and then there's your defined resistance. So all traders will be watching this. It could have some nice action. As far as real quickly, Apple, we've been talking about the somewhat constructive action here lately with option expiration with the 450 pin. Could it see 450? Yes. Overall, it does seem as if it's building this inverted head and shoulders pattern. There's your left shoulder. Here's your head. Here's your right shoulder. Yesterday, it gave a nice day trade for some who just day trade. It did break above that 449, 451, went as high as, what was yesterday's high? I think 454.50. Today it's down a little bit. I would say with the buy-in that usually comes in from the buy program early morning, it should at least go positive. And then if it were to close above 450-ish, I think that'd be positive. And then next week, we'll see if we really do get that constructive move back to at least the 460s, if not higher, closer to 500. I know that their big developers conference isn't really for 2 weeks, so we'll see what happens here. So overall, it's acting better. There are some trades here. Let's see how it holds in today. Some laughed at me yesterday. It was really Sperling's call. BlackBerry, I don't know why it would rally, but it did. Some people are saying they really love the video feature of the BlackBerry 10. Anyway, it held this longer-term support that it's been holding since a while now. Gave you a small red dog reversal yesterday into this, 14.16, closed okay, so I am long some of that. Let's see if it could get back to the upper end of the range. There's a huge short interest here. It's up while the futures are down, so it's something to watch for the day. Also something to watch for today, I think, is Intel. I did read that they got a big win over ARM Holding for the Samsung phones. Intel's been acting better. It's got a really nice pattern here. Okay, this was the level we were talking about around 22 to potentially buy it, and now it's been going sideways for a while. Holding above the moving average, consolidating. So if this were to break above 24.50, who knows? Maybe there's some relative strength today, and it could be something, for cash flow and something to keep in your swing account. They've always been, there's always been talk that they're behind the ball in mobile and in in mobile devices. So maybe into Samsung, that could be their way to go. And if you look at Intel, it really has not done much. Okay, it's not even above the 2012 highs. So with this kind of news, with a little bit of execution, at some point maybe, it could see 28, 29 this year. So maybe you throw it in the drawer. A lot of yield there and liquidity. So whatever. Just that's something that's in the news today. Yesterday, gold finally had a gap up that was actually, that had it was a gap and go. I still think it has a lot to prove, but overall, you go to the daily chart. We talked about the potential double bottom. Here is, when it broke the intermediate trend around 161, when it broke below 150, this was that reactionary low, bounced off, came back, tested it, and then yesterday, it gapped above and gave you a little progress. So you take a closer look here now. And I think for gold to have any kind of interest still, I think that it should hold this 136. Let's see if it can hold this gap. If gold could hold the gap for a little bit, it would show a little bit of power, a little bit of commitment, and then maybe it continues to retrace if you're trading it. Overall, it still has a lot to prove. As far as TBT with interest rates rising, I showed you guys how this was a huge level, going across on the weekly. Right here, which it would take a little bit of time to get through, and it couldn't do it the first time or the first try. So now with this little bit of pullback, if you missed the TBTs, I think, closer to this area right here to 65, try and accumulate it. Something you might want to throw in the drawer because, if rates do rise, and I think they will, whether it's 6 months, 3 months, a year, that this will be a nice vehicle for you to own. And, again, sometimes these things need time to get through major resistance. So here's your wide range bar, really maybe even 66, that would be your spot. Okay, it's come a long way in the last month, but overall I think that, people are starting to really believe that rates will rise, and I do think so. It's just a matter of when. This doesn't trade really well all the time, so that's why, you buy a dip, maybe put it in the drawer, and that could help you with, your longer term portfolio. So with that said, there's been a lot of two-way action. The banks have been very strong yesterday. A lot of them made higher highs. You look at Bank of America, something that I still own. It's been a really nice macro swing long. Here is 995. Here is recently at 1240. Then it broke out again. always want to trim and trail, but the banks have been the place to be, and I think they can continue to be the place to be. So, stay with them. Goldman Sachs also another really nice winner. It's going to be hard for the markets to really fall apart when you have the banks this strong, actually making a higher high, when the market is, not doing the same thing. So with that said, keep an eye on the banks for the strength. With some people who are looking for some type of buy the dip, okay, this group went from strongest to weakest, and right here is when you had your little this was your accelerated trend that broke. So if you got stopped out around 40, right around the 200-day, it's worth a look for longer term people who are interested. But again, since the market or since rates are looking higher, some of these type of stocks have been utterly abused because they don't really have much growth, and they were a dividend play. And if you can get some money in the bank where you don't have to worry about the stock price coming in the future, that's why this came back down. But at the 200-day, if you sold it, and up here you have the luxury to take a look at it, but I don't know how good of a trade it'll be. As far as other sectors to watch, the home builders are starting to get a little weaker. Okay, so right here, if this weren't, if this were to give, it's already below the 8.21. You could see a move to the 50-day, and then we'll see how it acts there. Look at something like Toll, already almost down to the 200-day. So there have been rolling corrections. There just hasn't been one of them in the S&P yet. So with that said, we'll see. All in all, lots of 2A action, lots of nice maneuvering, over the course of the past week, which has been welcomed by traders. I think traders like to be able to, shorten up open or buy it down open, have longs and shorts working, and not just relentless upside where you hear every time you go home and go to sleep, new highs, all-time highs, and everyone thinks you should be performing so well, and it hasn't been that conducive, or it's been a little bit trickier. So anyway, Friday, let's see what type of action we have. You have the last day of the week and the month. You have pinning going on. It might not be that easy, so don't push it. It's supposed to be a beautiful day around the country, so if you can make some money, end your month the right way, do so. If you didn't perform the way you wanted to this month, do not try and play catch-up today. And just give things some space, and I think that next week or so we could get some resolution. Hopefully you took some intermediate risk off on that outside day, made some money tactically both ways, and also sticking to a macro approach, because I do think you shouldn't be running for the hills. Although my gut tells me we see 161 first in the spiders, it's also telling me that we haven't seen the highs of the year. So pick your time frame and go with it. Have a great day trading.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet, at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.